Oil has resumed a rally after an industry estimate pointed to a huge drawdown in US inventories, adding to signals that the market is tightening. Joining me now to break down those moves is Bloomberg's Stapczynski. Stephen, how does this fit into the larger global picture?
Yeah, I mean, first let's look at this drawdown in inventories in the U.S. The API is reporting, according to Bloomberg sources, that there was one, basically, if confirmed, would be the biggest drop on a volume basis going back to 1982. That's huge, and that kind of draws into a larger picture that Saudi Arabia and OPEC Plus had been cutting supply, and they've been pushing down exports from their countries and tightening the market going into the second half of the year, now that we're in the second half of the year. And there's been this sort of larger view that these cuts, when added up, as they continue, will reduce the amount of supply, especially as you see demand rise in some places. The U.S. In the summer, there is the driving season, so we're also seeing from this API numbers, gasoline inventories also falling in the U.S. You're seeing gasoline prices rise, around the world as that supply tightens. So it fits this picture that while for the first half of the year we were talking about this potential overhang of oil, that overhang is starting to disappear to some degree, and we're getting a bit of a tighter picture, and that's why oil has been kind of trading up over the last few sessions.
And of course, the other narrative here is the Chinese economic recovery. What's the market's view on Chinese oil demand?
This goes two ways. The Chinese picture is a little bit complicated because, yes, you are seeing this rebound in Chinese crude imports. Especially last month when the numbers came out, it provided this sort of bullish sentiment in the market because everyone's looking at China. China is a huge market. Their demand was weak last year because of their strict COVID policies, and everyone expected a roaring comeback when they were moved coming into this year. But while these deliveries to China are increasing, we're seeing from the data that we're pulling together that a lot of these crude shipments and product shipments are going into inventories, which suggests that Chinese oil and oil product demand for 2023 maybe has already peaked. And if that's the case, then one of the bullish scenarios and bullish tones is sort of being taken out of the market. China, people are looking at China, and what China does will have an enormous impact. So if the demand for products isn't there, if the economic recovery is stalling, then that will take some of the wind out of the bullish sail for oil that I described previously.